Welcome to the start of your work week, everyone, with OETV. We welcome back Brendan McCarty from his weekend of fun activities. How are you, Brendan?
I'm great. How are you doing today?
Fantastic. It's great starting the week with pouring rain outside, everything getting a little bit colder. So we get to hunker down and get ready for a big week.
Yeah, lots of earnings all the time.
Exactly. And it's safe to say that you and I are both exhausted with conversations on inflation, interest rates, Twitter and Elon Musk, oil, many other macro-related topics. There is a lot of economic data out this week, but we're going to focus on earnings so that all of you out there can hear our insights and make up your minds about what you might want to do going into these reports. Take a look at this image from Earnings Whisper. That is a lot of names across all the sectors that we have interest in, and you either as a holder, from a bear perspective, or just general interest, want to know more about. There's a lot of names in there, there's a lot that I've left out that I want to talk about, but there's only half an hour that we will get to talk to you with. So, Brendan, let's jump into this. Are you ready?
Let's roll.
Let's start with today aftermarket. Cadence Design Systems, CDNS is their symbol. Brendan, this is a tough one to kick off with. The stock is down 4.3% this year, despite it being a software maker for semiconductors. I do not see any analysts with a sell recommendation on the company, but should investors be concerned about the slowdown we have seen in spending in the tech space?
I'm not sure about. It's tough with this name. They're a rock star of sorts, as they've been outperforming the S&P all year. So buyers have been hiding in this one. As they hide in this, the stock gets actually more expensive relative to the group. So I think that makes it more of the threat of the downside pressure could be higher because they have that premium valuation. Also coming into play is the whole part with the U.S. government and China and chips, the CHIP Act or the IDFA, I think they call it, or something. That is on the docket for Cadence. Their competitor Synopsys said that it's not going to be an issue. It's too much tech detail for me to fully grasp, so I'm not going to try to even understand it. But I'll just say that Synopsys says it's not going to be a big deal, so we focus on the earnings. That's where the investors are. And you can tell by the chart that, investors are like, all right, I think we can focus on that. So there is no threat of negative. There's no threat from that. But what if they were to announce some sort of threat and say it's going to impact earnings and Synopsys was wrong? Well, that's not in the chart. I would watch the 145 level in that regard. If they miss, I think the downside is much greater than the upside. The stock, though, has been solid all year. They continue. Synopsys raised in SNPS. Am I saying Synopsys? Yeah. They actually beat and raised, if I'm not mistaken, or they raised guidance. Cadence is expected to do the same. I would just say that if they were to announce, the market's only looking for positive news from this CHIP Act and another solid earnings report. Any of that otherwise will take this. It might lose its rock star status pretty quickly.
Yeah, I wonder if we had a decent week in the market last week. I wonder if we're getting back to a scenario of if it's in line, it's okay, and the stock's not going to roll over.
It's year end, right? This is where you run stocks higher into year end, and you get their little push, even regardless of what their fundamentals are.
Yeah, exactly. So it'll be interesting to see what they do say from it. So I'm going to have a lot of interest in that this afternoon. All right. Some of the big boys report Tuesday with Google after the close. And with the stock down 30% year to date, some may be thinking that all the downside is priced into the stock now. Growth rates are a big concern as global macro issues continue to grow. CFRA Research highlighted in a recent report that there's some currency headwinds there as well. But still, we see no sell recommendations from analysts. And it's hard to be bearish on a company like Google. But could a bad miss here catch investors off guard, Brendan?
It's interesting. Morgan Stanley, note just came out like a half hour ago. They said for an ultimate low in this market, and I'm not buying into the logic, but whatever. Basically, they said that analysts have to capitulate on stocks, and they have to say, we're going to take earnings down, and the likes of Google will get a sell rating finally. That used to be a thought process back in the day when you and I, before computers really were driving trade every day. I don't know if that's still the case, but Google is an example of that where they don't have sell rating. I think the analysts are too afraid to go against the tide. It's like Apple, right? But if you look at the chart, it looks a lot like Target and it looks like Morgan Stanley, both of which are heading to their pandemic lows. Ultimately, it looks like these days. Will that mean Google's going to 75? It's possible. They're a great proxy for advertising. I realize Snap warned and everybody sandbagged them and said they're bad management. But I tell you, I have 3 kids in this house who use Snap. I know a lot of kids who use Snap. I'm having trouble figuring out if Snap's problems are only management or there is an advertising slowdown, which Google will confirm to us. I also can't get past the fact that Netflix didn't really raise guidance on the back of the ad spending side. Maybe I'm just overly bearish Netflix for the wrong reasons, but if ad spending is slowing, Google's going to confirm it today. Now, YouTube, which is a powerhouse, which we're on this morning here, that has been speaking of Rockstar, that's been a Rockstar program. I mean, every kid still watches YouTube. That's longer than TikTok. They have a new competitor to TikTok within their little streams. I think that might be somewhat of an offset. However, YouTube missed the summer. So I think it only grew like 5% for ad spend when they were looking for 10. So if that's again repeated, yes, YouTube's a wonderful product. It's watched by a lot of kids, but ad spending is ad spending and it slows. I would just say they are still in a business that digital spending is still the focus these days. You can't cold call anymore in my business. You have to focus on digital spend. And that's where we are calling me. Like we're focused on digital spend. So Google still has that helping itself. Plus, they're raising prices for ads. So if you have, as we've been talking about in the real world, if you have demand and you raise prices, that equals more profits. So the question is, how much demand do they have left? Google's only been oversold twice in the last 20 years, this much on this turn. Each time it has risen. So the question is, will earnings get in the way of that bounce this time around, or will the third time be a charm, even though the first 2 times were supportive? I guess it doesn't apply in this case. Let's just look at it this way. If earnings don't get in the way, it probably does have its bounce from here.
It's interesting, just to go back to your comment on the analyst side of it. If we go back to and this goes way back into a different millennium, when I worked at Merrill Lynch down in Australia, and the rule there was that, and I'm thinking specifically of the banks analysts, that they weren't allowed to have a buy across all of the banks. And too often I see analysts in a lot of different banks and so forth just have buys.
Yeah.
And just no sells. There's a few holds in there, but it's all buys. And they've been caught unawares during this market, and they're really left holding the bag. So and it's a lot to reflect on. And I think a lot of these broker dealers have to have a solid, hard look at their analysts on having all these buy recommendations.
I think the last 14 years of markets, 15 years, a lot of new analysts came in the business, and a lot of them don't know what the other side of a market looks like. And like I actually reading analyst reports this morning, a lot of them are saying, like, are actually guiding down in their numbers. Like I think we're gonna talk about Apple later. Bloomberg is saying that they think they're gonna miss. Like I've never seen anybody think Apple is gonna miss. So it's a fascinating maybe that's where they start making their turn, and that's when the likes of Morgan Stanley finally sees that capitulation. I mean, the buy rating, analysts for me have always been good about. Now you look at the numbers, and they can read a balance sheet better than most people. They just can't pick a stock direction.
Yeah, I think these earnings, you're still going to catch the tail into summer in these earnings, right? And it was a great summer for everyone out there. A lot of people spending everywhere. I think the next quarter earnings are the ones we're really going to be aware of.
Yeah, you're not seeing there like the forward and the trail numbers of the S&P. They're not falling much. They're basically holding in. So maybe it's the quarter they finally fall. We'll see.
Okay. Also on Tuesday, reporting after closes, Microsoft. They're down 28% year to date. And recently we saw Alpha Insight recommended as a short trade. Mehdi's going to be talking with Jeff Hughes tomorrow. So we should check in with him to see what he thinks about these numbers. I saw Guggenheim doubting their ability to maintain full year guidance. They have a neutral recommendation, but most banks have a buy recommendation still on their stock. Brendan, what are you thinking about Microsoft?
So Microsoft turned randomly, like that turn off of 220. It's a nice round number, but on a weekly chart, it doesn't have any support whatsoever for anything. These random turns that we see in markets, Like we talked about in our little chart views that we put out every Wednesday. Basically, like trying to remember what stock it was. It was the CAC 40. So the CAC 40 just randomly turned. It had no support anywhere. It was news driven. I mean, charts on a long-term basis always have some sort of basis for their turn, whether it's a Bollinger Band, whether it's a key support. I mean, 220 in Microsoft really sort of could be a support. I don't know, but on my charts, it isn't. It's really an anomaly. So the bounce last week to me has me questioning. Well, all right, was this a real turn, or is this a market turn? Microsoft, in terms of its business, though, I mean, my God, they have leadership in so many things. Like I didn't realize that buying into the gaming sector now they're the biggest player in the meta world. Never realized that one. That they leading to a dominant gaming position. They have a huge. Their cloud content is big. Like I've been told that Azure is easier to use for the novice server user than, say, Amazon Web Service, which is a little more hardcore. I mean, that's a big question. Like if you have a lot of new businesses coming online, they might go to Azure because of the Office. The question is, can they, with such a dominant position, can they continue to grow so aggressively if the economies in the world are slowing down? That was the question for Microsoft during the 90s, right? When they had the Office product and they're constantly failing Windows. I mean, every time they upgraded Windows, there was a bug. I mean, I think that's Apple's thing now with the iPhone, but that's a different story. I mean, Microsoft this time around is not dealing with Windows; they're dealing with very powerful leadership in a lot of different sectors. I would just say though, the stock kind of turned on a random spot, and for me, that kind of adds questions. Breath is not great. I'm sure they'll probably beat; they always do. If they were to guide down, I don't think that would be expected. I think they cut jobs, and that hurt the stock last time around. I love how they sell stocks these days on job loss. I mean, they tell you that they're cutting jobs, but then they go hire people that are cheaper. That's all they're really doing. I would just say Microsoft has had many bounces. Like we just mentioned, Google had a couple bounces in the last 20 years. Microsoft's had like 7 or 8 of them. They haven't always translated to bounces. So I'm thinking that Microsoft may bounce, might beat on the earnings, and probably will given their position. I mean, it's like UNH. We talked about UNH a couple weeks ago. UNH just is generating so much cash, it's hard for them not to beat. And sure enough, they beat by 3 cents more in the previous quarter. I'm guessing Microsoft will probably beat again. Outlook is always important. They'll look at Azure for the cloud. They just have a massive dominance elsewhere. But other than that, I don't think the stock's upside is there. I think it might bounce a little bit more from here, but it has unfinished business lower. And I think ultimately it has to go lower before it goes higher.
Okay. I think last week or the week before they announced they're cutting 1,000 more jobs as well. So
I still firmly believe though that like wage pressure is so high right now. It'd be smart for a company to, like, you know, in that business, you can just lay people off on a whim. You don't have to really justify it. I don't think. I'm not sure on HR rules. I have to think of that, but you could easily then go hire the other 11 million people looking for jobs. I mean, there's just a lot of people and a lower wage rate, you know, and then give them stock at 140 something dollars a share or whatever the stock was to. I didn't even look.
Well, it's all about the skill set you're hiring as well, though, Brendan.
Yeah, that's a fair point.
All right. I feel like every company that I'm bringing up, though, is down 30% so far this year. And now I'm going to look for your views on Boeing, Brendan, who report before the bell on Wednesday, before the opening, I should say, on Wednesday. Guess what? They're down 29.8% year to date. The CFO is talking a big game going into these earnings with the expectation of return of positive free cash flow. But could FX, supply chain issues, and labor concerns put a hitch in their stride, Brendan?
I can't stand CEOs to talk up their balance sheet. I know it's their job, but be conservative. You know, do your job and get off the PR circuit. Aside from that, they might have a case for it. The airlines last week beat earnings big time. UAL and Delta were huge. And we talked about Delta and said that just like Google, raise prices, have more demand, lots of profits. Well, the airlines are what I would think. Now, if this profit were to continue, and they still have to increase capacity, which includes new planes and new people, that feeds right into Boeing. I mean, Boeing's going to sell these planes, and that makes the outlook better. The stock also chart, powerful reversal off the lows there at 120. It's funny. I remember years ago, I think when Boeing restated earnings because there was potential accounting problems, 120 held it years ago too. But aside from that, I guess I think too much of these numbers sometimes. But could the question with Boeing is, are the airlines going to pay down debt, pay their employees, or go buy planes? And so far, that is not factoring into Boeing or Airbus. They both reported that the demand is rising, but it's still not rising quickly enough. Now, you look at this chart and you look at Boeing and you look at the UAL, the XAL, which is the airlines. They're rising together. So Boeing is trading on an improved outlook in the airlines. That's, I think, it comes down to government spending on defense right now. There is a war in Ukraine that we're not involved in, quote unquote. We're not flying our planes over it, so that's, I guess, not a Boeing benefit. But I would just say that Boeing is going higher with the airlines, and if the airlines continue to produce profits like they are, sorry, no,
they continue to soar.
Continue to soar. If they continue to climb, Boeing will continue to climb too. I mean, if you get a Republican Congress, you could get more outlays for defense, which feeds into Boeing. But I think sustainability, though, they're going to be a point where maybe it's 170 on the chart. It gets back to the top of the range and says, all right, are the airlines going to finally buy our planes? That's what it's going to come down to. Also, there's that little problem with oil. Oil doesn't fall any further. That might impact the airlines eventually too. But right now, so goes the XAL, so goes Boeing. And the two of them are trading in lockstep. So if the airlines continue to push, I would think Boeing would continue to push with it. Earnings wise, I don't know if it's going to be a great report. I don't think they've had a great report in ages, but they might say an outlook for airlines is there. So we'll see.
Okay, let's move on to Meta. They report Wednesday after the close. And listen, I knew they were down this year, but I didn't realize they were down 61% year to date. Brendan, earnings estimates have been lower by 29% in the last 3 months for Meta. Sometimes something seems wrong with the company. And at the moment, I've got several analysts talking to me saying the same thing of late, that there's something very wrong with Meta. Google should give a good indication on advertising here. But Brendan, what the hell is going on with Facebook/Meta?
So I said Snap earlier that it was management being blamed for the problems. Zuckerberg's being blamed for this, and government intervention and whatever, unlocking value. So I think IBM went down for years before they figured out how to start spinning things off and figuring out their growth road. And now IBM's finally moving higher. Meta has the same problem. It's management. It's unlocking value. I think, if I'm not mistaken, it's trading at a 30 to 40 to 50% discount of its sum of parts right now. Analysts expect. I mean, WhatsApp's got 2 billion users. WhatsApp's also going to be used for transactions. Like, you're going to be able to buy stuff directly through the WhatsApp. And I think they have a deal working in India. Meta was the Meta Universe play, turning out to be a problem. I don't know if it was a smokescreen for the slowdown in Facebook anyway, but IG is still a powerhouse. It's still used by a lot of people. It's still generating a lot of revenue. The problem with IG's side is they're going to have to start sharing revenue, it appears, just like TikTok does on the creator side. That will impact margins as well. But I know a lot of value players that are buying the stock now. I think that might be coming into play. Once again, advertising is a big deal with Facebook on the Facebook side and the rest of it. If they ever unlock value and said we're going to spin off one of these properties, I think the stock would take a turn. I think it comes down to creating a new. It's like what we talk about, MSG. The stock MSG has been falling. It was trading behind its peers because they didn't unlock value. They weren't selling any piece of themselves, so the stock backed off. Meta could be the same thing. It's got a lot of unlocked value, and they're not unlocking it. So, and they're investing in the metaverse, which, as we just said, Microsoft has got a leadership in. I think one analyst said they have to tie up with Roblox or something. Like, Meta should get in with Roblox, a couple others, to make the Oculus better. Like, the Oculus is getting. I'll tell you, the Oculus was not great a year ago. They just came out with an NFL game that my son loves. You're the quarterback throwing the football in 3D, and that's pretty cool. The quarterback is the featured position in the NFL, right? Oculus may have finally figured it out. I don't know how profitable it is, but that's another piece, right? So Meta's problem is they can't unlock value. Their focus is not exactly right, it appears, and that's the problem. And I think it's the same problem in hit Snap. Now, advertising slowdown is a big signal out of this. I think they'll still have it. Margins seem to be shrinking a little bit. Nobody's pricing any upside whatsoever. So I think in this case, the upside's greater than the downside. And as Brendan said, that's a good point too. CBDCs are a big deal as well, as Brendan just said. So anyway, I would just say the upside I think is greater than the downside in this. 110 is probably going to support it. I don't think anybody expects anything positive out of it, but you get 2 billion users on WhatsApp. I think you have to figure out a way to unlock that.
And for those in the background, Brendan's not referring to himself as a second person. We have Brendan in the background handling all of this. All right, Thursday after the close, it's Amazon's turn to join the earnings party. Down just over 28% for the year, but analysts are seeing a ray of light for this quarter after Prime Day's numbers will be in its Q3 numbers instead of its usual Q2. What I'm looking to hear from them is their comments on the macro environment. And if it is what we've heard from other mega companies, it could put fears front and center with the market again. Brendan, what do you think we can see from Amazon's numbers?
So this is another one that the value players are buying into. Chart sort of looks like Boeing. Bounce is higher, less volatility. And they used a round number of 100, just like Microsoft did at 220. These algorithms all think alike, I guess. Breadth is mediocre. Momentum, nothing. They do give a read on the consumer, but the investors in this are looking at the cloud. They're looking at streaming. They got Thursday Night Football now, so I'm actually quite intrigued by how that's actually going to do. People say that their streaming is actually better than the view is better than any football game you can watch in terms of quality when it's not crashing. That's the one problem with it. But on the consumer side, inflation is impacting their margins. They are raising prices on the cloud. We use AWS, and we're seeing higher prices. Grocery prices are coming down, and I'm seeing it. I've been in the grocery store the last 3 weeks. Grocery prices are coming down, and they're coming down over a wide spectrum of products. That is going to come into play with Amazon. I don't know if they'll talk about it now. I don't know if they'll even bring up deflation, the prices. But if that were to be the case for Amazon, that means their margins are all going to improve because, as we know, the end price on certain products do not come down. So if the input prices are coming down more aggressively, that's better margins for Amazon. There's also a Prime Day shift. I don't think Prime Days matter as much as they used to. I remember when they first came out with the double Prime Day and everybody was super excited about it, and it missed and it was boring. I think we talked about it a few times over the last couple of years. There was a shift on Prime Day, so they think that will help with earnings. I think it won't. I think the consumer's a little tough out there. I think that the top line maybe it's the bottom line we all need to look at. And there's talk that they saved $1.5 billion on expenses. I think the one big wild card that could actually influence earnings higher is oil. They are a major consumer of oil. When oil came off of 130 earlier, a couple months ago, or 120, Amazon started to rally. I don't know if that's market or that's Amazon, and they are a big shipper of their own. They ship a lot with their own stuff. So that's the thing. The idea to watch with them is not the headlines, the earnings. And if the earnings are better, I think that keeps the stock going. If earnings miss, that's going to put a lid on this breakout of sorts that's forming.
Okay, and the last one we're looking in depth at is Apple, which we mentioned earlier. They report after the close on Thursday. I'm in the minority in the US as I do not own an Apple product. Oh, hang on. I do own one Apple product, the original iPod from back in 2002. It's floating around somewhere in the house, and surely it'll be worth something one day. God, I've got to imagine the music it's on that now. I think about it as well. It's probably fantastic.
You got your 100 songs.
Apple clients are loyal and happy to pay the higher prices that go hand in hand with Apple products. But with speculation of a pullback in production for the iPhone 14, maybe we could see a slowdown in revenues ahead of the last quarter. The stock is down 17% this year, so it has performed well compared to the rest of the market. Many have lost their mind trying to short Apple before, Brennan. is now the time to jump on that bear trade?
There's a case that you could make for it. I have heard so many rumors of the last 3 weeks, and it seems to be something that they just stick on Twitter. Apple's having supply issues with the 14. I can tell you that I actually saw that up close and personal when I was getting my 11 fixed. I can't believe I'm still on that far behind. I haven't upgraded yet, believe it or not. But I would just say that they are having issues with the phones. I saw that. It was there. I know people, the Apple bulls will never give up on Apple. It's the IBM of this generation, or IBM of years ago. This is Apple. And maybe Microsoft has taken the leader mantle now as the stock you own, not Apple. Apple really hasn't gone anywhere since late 21. If you were to put our money model up against it, so our money model measures the money in the system, you put it up against this chart, our money has been coming, the money model has been falling since the point they peaked. So for me, Apple is all about its market movements. It's less about its overall view anymore. It's like Bloomberg is, so I mentioned Bloomberg is actually negative on them. They only think iPhone sales are going up 2% over the next 12 months, which is actually quite fascinating. That's sticking your neck out, because I think they grow fast. They grow faster than the economy typically. I know I will be finally upgrading to whatever version is a year ago. I thought I was going to 14 now, but I might be 15. Their goal, what Apple needs to do is figure out everything else. The iPhone at some point will become the BlackBerry, right? The BlackBerry was the leader for so long. The iPhone will be it. So now the watch is waking up. It's actually, I think the watch was really good lately. Services is big for them. There's talk of that self-driving cars back on them. It's back out again. Though I think Tesla said that theirs is ready. I'm not sure. I would just say, if you're going to short it, it might be in this area. I think it's running right into the 65 week. I think you need a market sell-off though to really get this thing moving, or the Swiss National Bank to start selling again. That's ultimately what hit it last time, because they have such a huge position in it, and currency movements were an issue. This stock just has so many different stories. It's not even an earnings related thing. It's just so many different variables, and these lemmings continue to follow it like it's the end all be all. It's like, oh, we got to own Apple and make it our top holding, or the ESG fund. We got to make Apple our top holding because it's an ESG stock. Really isn't. So anyway, so I would just say, if you were probably thinking of shorting it, it's right here. It looks like it has momentum to run higher. Relatively speaking to its last earnings, it's actually a little bit weaker trading wise. So maybe people are finally giving up on it, but it doesn't look like it in the chart yet. So we'll see.
All right, then, as you always, we wrap up the show with Love It, Like It, Leave It, which is performing very well, which you put a tweet out on last week on how it's performing. Continues very well. As I've said before, you do all the work on that. I just bring up the names. So this week, once again, obviously with an earnings week like we've got, it's all about the earnings. You ready?
Yeah, I'll just add, I tried to back test this before we started doing it, picking my own sample, and the returns aren't as good as the ones you pick. So I will just say, whatever methodology you've been using, it works. It's just it is what it is. It's the numbers have done well and the momentum is there. But I think we're in that point of time where we're transitioning in this market. So we'll see how it goes. But go ahead.
All right.
We're ready to roll.
All right, let's start. Logitech reports tonight at 9:00 if you're going to stay up for that.
I'll get my mouse ready. I like it. Thinking the turn on 45 may actually start to rise. So it unwound the whole pandemic. So I like it.
I don't think Kramer likes it. So let's see how that one goes. Haliburton, they report Tuesday pre-market.
I like it. Stocks on a roll, even as energy backs off. Probably speaks to rising services demand, which as of 2 weeks ago didn't exist. 36 is the next target, 42 after that.
And one of your favorite sectors, biotech, they report Tuesday pre-market as well.
I like it. I'm not a fan of stock that rallies 70 points in a given week. That happened a few weeks ago. Biotech is kind of all, it may have gone back to the previous range. Excuse me. But I like it. I think it can get up to 290-ish. I think that's where it's running to.
Okay, the next one, very interesting chart. Seagate, they report Wednesday pre-market.
So I love that candle turn on it. It's just, it's not a doji, but I think it's called a hammer. I'm not sure. I like it though. Nice turn off 50. Looks like it's climbing higher.
Okay. Another one of my favorite companies, Caterpillar. They report Thursday pre-market.
CAT has a strange correlation to the CRB. Not strange, but as the CRB moves lower, the farmers buy less CAT stuff. So I think that's coming into play. So I would leave it. The chart also says that. Ran to the 65 week, has weak breath. CRB is pointing lower. I think that impacts sales. So I leave it.
And the last one we're looking at for Brendan sitting in the background, Chevron reporting Thursday pre-market.
So I don't understand how it's rallying, but it is. Energy is kind of paused, but they must be printing cash. So I like it. Powerful chart in the face of weak crude, but perhaps the upside. 175 might limit it. It breaks over 175, it's going to run. If I was an opportunistic short, I may look at 175 given the price of oil. But right now, that's not the case, so I like it.
Okay. Well, that wraps up the show for today, Brendan. Thank you very much for your insights as always. You have a great week.
You too. Take it easy.
And for everyone else out there, good luck investing.